Hello, welcome back to my channel. How much money do you put aside every month for savings or investing? It is important to develop good financial habits and make financially responsible decisions. In this video, I will talk about some important concepts of finance, time value of money, compounding interest, and the rule of 72.
One of the most important financial concepts is the time value of money. Money that is available at the present time is worth more than the same amount in the future due to its potential earning capacity. Money you have today can be used to invest and earn investment income, such as interest, dividends, or capital gains. The future value of money equals 1 plus rate of return to the power of the number of periods and multiplied by the present value. Let's look at an example. Assume you have $10,000 today for investment. Depending on the type of investment and the rate of return, the value of this $10,000 initial investment will be different in 20 years. Compound interest is another important concept. It means that the interest you earn will also earn interest. Assuming compounding interest and you are reinvesting your interest at 1% rate of return, your $10,000 will grow into $12,202 in 20 years. At 3% rate of return, your $10,000 will grow to $18,061. At 5% rate of return, your initial investment will grow to more than double in 20 years. It will grow to $26,533. Depending on the type of investment, you may be earning capital gains in addition to the interest or dividends. The actual future value may be higher. When interest rates are low, putting money in your savings account is not going to give you much interest income. Depending on your risk tolerance or preference, you have different investment options. If you prefer low risk with low returns, you may want to invest in GICs or government bonds. If you can accept a higher risk, you may prefer mutual funds or stocks. Some people prefer dividend stocks, which are companies that pay regular dividends. Usually, well-established companies with a track record of distributing earnings back to shareholders. There are many Canadian companies that provide annual dividend yield of 5% or more. If you prefer real estate exposure, you can choose Real Estate Investment Trust. There are also exchange-traded funds that provide exposure in many different sectors. These are just some examples. Please talk to your financial advisor to assess your risk profile and determine the types of investment best meet your expectations. Another important concept is the rule of 72. It is a simple way to determine how long an investment will take to double, given a fixed interest rate. By dividing 72 by the rate of return, you can obtain an estimate of how many years it will take for the initial investment to double. For example, at 1% rate of return, it will take approximately 72 years for your initial investment to double. At 2%, it will take 36 years. At 5%, it will only take 14.4 years. Again, this assumes compound interest. It is important to develop strong financial skills and make financially responsible decisions. The time value of money concept shows the earlier you start investing, the more time you have for your money to earn investment income and grow. It is very important to prioritize savings and investing. Personally, I always save at least 30% of my after-tax income. Also, putting your money in a registered account, such as a tax-free savings account, could result in significant tax savings. If you're not familiar with TFSA or RRSP, please check out my other videos. Finally, you should teach your children about personal financial management, budgeting, and investing. Encourage them to start saving at a young age. With time value of money, this initial investment could turn into a bigger amount by the time they go to university. The other day I noticed something very interesting, which is about 75% of my viewers are non-subscribers. If you like my videos, please subscribe to my channel. Thank you so much for watching. The content of this video is intended to convey general information. It should not be relied upon as financial advice. All investments involve substantial risk of loss. Please get professional advice from your financial advisor. Thank you so much for watching.